Economic Center. Today, we host a report launch, for sure one of the most important reports of the year for the Africa Center. We are happy to do that with our historic partner, the Policy Center for the New South. And before diving into this with the authors, allow me to give the floor to Madame Nadia Feta Alaoui, Finance Minister of the Kingdom of Morocco, who honors the Atlantic Council by providing opening remarks. A very good way to hear her thoughts about the 2024 spring meetings of Washington, 6 months after the successful annual meetings of Marrakesh. Madam Minister, it is a delight to have you on this platform. Welcome and thank you.
Thank you very much for having me and giving me the opportunity to witness the launch of the report.
Thank you. Madam Minister, from Marrakesh to Washington, can you tell us about your vision of the international financial architecture, the global economy, and your own country, Morocco?
Morocco have been benefiting, I would say, from the support of the Bretton Woods institution, especially this 4 or 5 years with all the headwind and the crisis. With, I would say, two objectives: having sound fiscal and policies to come back, I would say, to the macroeconomics balances, but also a very strong reform agenda. And we have been, I would say, benefiting from the flexible line, the resilience and sustainability trust, but also very good partnership with World Bank. But the crises are unpredictable. Morocco, as many other countries, suffered from, I would say, exogenous crisis, but also internal problems. Unfortunately, the earthquake in September. We also suffering from 6 years from the droughts. So the challenge we have, as so many countries, is that money is needed for all this. We need to mitigate the crisis. We need to build strong social state. Morocco is now, I would say, giving real support to population, that universal health care, direct money transfer. We also are struggling with the climate change and all this. This is why we need to call for, at the end of the day, more money, more flexible processes, a bigger voice for the middle income country that still have poor pockets and many challenges. My second point is that Morocco cannot succeed unless all Africa is doing better. And unfortunately, some sub-Saharan countries have much more troubles with paying back their debts, having access to energy, to social protection. And therefore, we call in also for the Bretton Woods institution that have made, I would say, a lot of studies that understand very well the problems, really to come with immediate answers for the needs of these countries. We need also money for regional projects. Morocco, for instance, is part of very interesting one on gasoline pipeline from Nigeria to Morocco. And we don't have solution to finance projects that go across 14 countries. His Majesty the King had also launched the Atlantic Initiative. Many countries in the Sahel don't have any access to the sea, and Morocco is offering support. So also we need solution for a regional project. And finally, for the private sector. Probably private sector is a solution, but the private sector is expensive for our countries, is not willing to come to our countries. So Morocco is doing well. We have only 2 institutions that go to and have access to the international capital markets, the government and OCP. So private sector, yes, but we need some guarantees, some solution to make it, I would say, affordable for many countries. So just not to be too long, I had the chance to see the recommendation and the solutions that of the report, and I would like to congratulate the Atlantic Council and the Policy Center for the New South. And I cannot agree more with all the recommendations that are in this report. Hopefully, it will be heard and implemented with the help of the 2 Bretton Woods institutions.
Thank you very much, Madam Minister. I think the author will appreciate this. Congratulations coming from you. You represent a country with a leading role in Africa. And of course, you have been at the forefront of the efforts of the kingdom to organize the annual meetings of October in Marrakesh. And it was a very successful meeting. And I think that we have been all of us have seen how this context have helped to launch this historic call for additional seat for the African continent, and we thank you for that.
Thank you
so
very
much, Madam Minister.
Thank you. Thank you, Emma.
So now you can leave, and then the others will join.
Your turn. I made it short because your report is much important.
Thank you very much.
You too. Come on, please. Comme vous voulez. So we are going to continue this conversation with the authors Madam Minister just mentioned. So I'm delighted to welcome two of them, authors of the report, the Africa Center and the Policy Center for the New South published together today, the reform of the global financial architecture toward a system that delivers for the South. You can find it on the Atlantic Council website with a preface by Dr. Karim El Ainaoui, President of the Policy Center, and myself. I would like to thank the Policy Center for the New South for the unique cooperation between our two organizations on the most critical issues of the century, with this singular angle that makes our common leadership from Morocco to Washington. So the four authors, I would like to say a quick word about them, to present them before giving the floor to those who will represent the group. Youssef El Jai, who is an economist at the Policy Center for the New South. Also Hafez Ghanem, Senior Fellow at the Policy Center, former Vice President of the World Bank for Africa. And of course, Otaviano Canuto here, Senior Fellow at the Policy Center too, former Executive Director at the World Bank, at the IMF too. It's pretty rare to have both positions. And former Vice President of the Inter-American Development Bank, and former Deputy Minister for International Affairs at the Ministry of Finance of Brazil. Congratulations for this wonderful career. And Stephane, Senior Fellow at the Africa Center, who is also the COO of MIDA Advisors in the private sector, and he used to be an Assistant Secretary for International Affairs at the Treasury in the US. So thank you for this report. You have heard how the Minister of Finance of Morocco had appreciated your recommendations. So we have 30 minutes, maybe 20. So let's start with Otaviano from the Policy Center for the New South, or maybe Stephane, while you are setting up your mic. Stephane, why do you think it's important to reform? Just a general question to start before diving into the very the private sector. Why do you think it is important to reform the international financial architecture?
Sure. Thank you for the question, and thank you for hosting us today. The international architecture should reflect the realities of the world. They were built decades ago in a world that looked very different, and where the economic balance of populations were very different. And today, developing countries contribute the overwhelming majority of population growth. They're the drivers of economic growth, and the needs are very different. And the architecture should reflect those needs today.
And Otaviano, I guess you share Stephane's point of view. One of the key issues or challenges for this financial architecture is the governance. What kind of governance reforms must occur in the current global financial architecture, and you tackled in this report?
Definitely, Ambassador. We need to have a higher degree of legitimacy of these institutions, as Stephane said quite well. In the case, for instance, of the IMF, we have a distribution of quotas, and those quotas are extremely relevant because they define the access to resource and as well as the voting rights. They need a realignment, as acknowledged by the Board of Governors of the IMF, that indeed approved last year the idea of a plan for, by June 2025, some proposals of quota realignment to be put in place. And as usual, whenever there is an IMF quota realignment, there must have as well a change in voting rights on the other side of the 19th Street here at the World Bank side. And, but we also highlighted in the report some other reforms that might boost that credibility and legitimacy of the IFIs, such as, for instance, the use of a double majority rule, that is to say majority of shares plus majority of members for some key decisions by the institutions, as well as, it is quite important to delink the access to IMF resource from quotas.
I will ask you at the end of this conversation, each of you, which is the most important reform you advocate for in this report. But in the meantime, I would like to ask to come back to Stephane. Otaviano Canuto just stressed the importance of governance, one of the biggest challenges. There's also the lack of cash, of money to fund the African economies, and more largely what we name the global south economies. So, and in your report, you emphasize the importance of the private sector and the role, the important role that credit enhancement and guarantees can play to mobilize the capital. So you also speak about the need to establish a clearing house for these solutions. Can you say more about that?
Sure, thank you. So the African Development Bank estimates, and there's lots of numbers, but I'll use their numbers. They estimate a funding gap of up to about $100 billion annually for African infrastructure. There's no way that donor countries are going to be able to meet that gap.
Fund this, yeah.
And we shouldn't aspire for them to do so. Much of this is commercial in nature. Africa, it's been well documented, faces a sort of a credit penalty that is delinked from the reality of the risks that they face. Industries are poorly understood, the risks are poorly understood by many foreign investors. So you have opportunities on the continent, capital sitting outside, that doesn't understand the environment well. Credit enhancement tools play a critical role in helping sort of bridge that gap, right? Helping align risk pricing to the risk realities. And we see that most of the credit guarantees, in fact, are profitable. They don't lose money on the exposure. If we're going to unlock the capital, we have to sort of close the gap between them, close the risk understanding, and do so. Now, the point of a clearinghouse, to their credit, the development institutions have rolled out, bilateral and multilateral, many credit enhancement tools. The issue is they're fragmented, they don't overlap well, and they can't be combined, actually, which is a problem, right? So many projects face unique sets of risks that can be well suited or well addressed by combining different guarantees. A clearinghouse would allow us to pool the guarantees, bring transparency to the pricing and to access to them, and sort of lower the threshold to allow projects to access them. It's quite critical to allow sort of the closing of the gap between capital and opportunity.
What is remarkable in your report is that you make recommendations, concrete recommendations like this one, but we cannot ignore the amount, the huge amount of debt, of the debt crisis today. So a few days ago, before starting this week here at the IMF, at the Atlantic Council, we hosted Kristalina Georgieva, the director of the IMF, who stressed her fears and concerns about the debt crisis. Otaviano, why is it more difficult to deal with today's debt problems than before? Because it's not the first time the world, and especially the southern countries, developing countries, are facing such a debt crisis.
Right. During my times as a VP at the World Bank, one of my responsibilities was to have the department of debt
You mean that I
management.
forgot to mention
Yeah.
that too? Because the list was so long, but good to know.
I'm old enough to have many things. The debt management department clearly stated out the conditions underlying a successful debt restructuring process. And that needs facing the so-called collective action problem. When you have different creditors of a country, each one of them hesitates to offer some sort of relief with the fear that some of the others might take a profit from it, not offering any relief. Now, in the past, not by chance, the HIPIC and everything that happened before that was made more possible because of the Club of Paris, reuniting all the official creditors. Now we are in a situation in which we have, on the one side, as the World Bank aptly said last year, a substantial half of the world's poorest countries either in debt distress or at a high risk of debt distress, while at the same time we have a combination of lenders, official lenders, that are not members of the Paris Club, which is the case of China, plus private creditors. Put them all together has been a high toll. And that's why the G20 common framework didn't go much far beyond only working with Chad, Ethiopia, Ghana, and Zambia. Whereas there is a total of 37 eligible countries. So we need to boost the collective action, reunited dimension of this debt negotiation so as to tackle the tremendous issue faced by these countries. And by the way, we at the Policy Center, a couple of colleagues, we suggested to the T20 last year a sort of a debt relief for climate initiative, kind of imitating what happened at the HIPIC negotiation, where the debt relief was accompanied by commitments by countries to use the savings to, at the time, invest in projects associated with poverty reduction. Now we could have something similar being done for climate.
It's timely you highlight the climate issue, because I wanted to dive into more practical topics, the energy transition with you, Stephane. We know, I mean, we can see that every COP is an opportunity for all the international community to make commitments, financial commitment to address the climate challenges for developing countries, and it's never the case in terms of practical answer. So, and Africans have found a way to finance themselves their needs, securing blended finance, working on energy, carbon-intensive energy projects, etc., etc. So, but they are not able to secure development capital without subsidies. So, what can be done to resolve this impasse?
Thank you. So it's an incredibly important question. I think there's a meta question that sort of covers this. So when I was at Treasury, we would often wrestle with this. And sorry, one clarification. I don't want people at Treasury getting mad at me. It was Deputy Assistant Secretary.
Deputy Assistant Secretary.
I don't want them getting mad at me. You know, we often wrestled with how to not crowd out the private sector, but how to sort of meet the development needs, how to balance development and sort of emissions targets, right? You know, Todd Moss over at the Energy Hub for Growth has a line he goes back to all the time where he says that energy poverty is the best predictor of future poverty, right? And it's a really important data point, right? Energy poverty is poverty, plain and simple. And if we're trying to solve poverty, we absolutely have to solve the energy issue. Now we have to do so and address a climate crisis that Africa sort of, and many developing countries sort of face more acutely than others. You know, and the balance that I frankly don't think we have right today is the impositions from donor countries on funding for energy projects and what is and is not acceptable, or what does or does not qualify sort of for development funding in the energy space are too strict and effectively, in my opinion, rob many developing countries of the sort of the autonomy and independence in defining their own just transition. And they're counterproductive, in my opinion, because more often than not, they take the donor countries out of the conversation and open the space for others who are less scrupulous, less committed to sort of a just transition or to decarbonization of energy. There's the donor country policies, I would argue, should be informed by the strategies of the countries who seek to develop. They can be informed, we should support them in defining the transition, but we should then support them in actually realizing those transitions. And the word transition matters. We can't go from where we are today to an absolute sort of outcome that is fully decarbonized. Or if we do, we have to have an honest conversation about who's going to pay for that, right? There's lots of good data about sort of Africa's contribution today and historically to carbon emissions. They are low. And if you really look back a century at the stock that's sort of been put in the atmosphere, it's trivial. The cost, though, is being imposed on them. And when we say on them, it's by end consumers. They're the ones who are going to pay more for energy if they have excess energy. If we fail to support them, I'm from Central African Republic, it's a perfect example. They will cut trees. They will, in fact, have sort of more harmful outcomes for the environment. To solve the problem, we have to address the financing. We have to make it sort of far more accessible. And we have to sort of democratize access to the subsidies. Far too much of it goes to the DFIs, who I would argue benefit from, rightly, from deep subsidies from the donors, and should find ways to open up, and I'll use the word clearinghouse again. We should sort of bring transparency, whether a clearinghouse or another mechanism, in the grant mechanisms for climate transition. And we should absolutely increase technical assistance funding, grant subsidies, especially for high impact, smaller projects that reach the sort of people who are really deeply off the grid.
Speaking of the development banks, the question is, can we rely on them to address this question? A few months ago at the COP28 in Dubai, the Africa Center launched a report signed by Dr. Jean-Paul Bourgault, one of our colleagues, senior fellow. He was tasked at the beginning to work on the idea of green bank, a multilateral green bank. And finally, his report was about green banking.
Right.
It was a slight difference, and I was wondering why. Maybe Otaviano, you can tell us.
Right.
Can we rely on multilateral development banks to address and provide, to address these questions? What about a green bank?
Right. As of today, no. The answer is no. If we take into account, for instance, the report made by the expert group on MDB reform for the G20, the figures that they estimate there as necessary, they round up to $3 trillion annually for, let's say, for the South, of which 1.3 trillion just for Africa. And that would be made up of 1.8 for climate and 1.2 for the other SDGs, which remain important. So the international financial system would need to provide an additional $500 billion, 1/3 of which should be, as Stephane correctly remarked, in the form of concessional financing and grants. Now, we also need the international private capital. That's why we know that the fiscal limits, the fiscal space limits, will not allow governments to provide through the multilateral institutions enough money. And we have to think of ways to make up for, the estimate is that MDB should provide at least $260 billion per year. And this is happening at a time when the ODA is declining in real terms. And not to speak of the fact, as we highlight in the report, that what is accounted for as ODA, it is not ODA. It is in donor refugee costs, support for Ukraine, and so on. And so we need to figure out other ways. The Green Bank is a possibility that is also discussed in the report, in the sense that it would be an institution, the governance of which would allow for the presence of private investors, and therefore we might, let's say, the governance would be accordingly so. We could have a green bank that has a capital comprised by both public and private sector agents, and which would make its funding, by definition, green bonds, and hopefully even carbon credits if we manage to have a fully developed carbon price system and so on.
Interesting, Otaviano, just from the development bank world to the private sector, Stephane. What is fantastic in this report is not only the content, the remarkable policy recommendations, but also the diversity of the expert group working on this report, with a mix of economists, of private sector, or development bankers, etc. And you represent the private sector with your firm. I mentioned at the beginning that you are the CEO of MIDA Advisors, and last year your firm MIDA Advisors successfully facilitated a large Eurobond issuance for the UEMOA Mortgage Liquidity Fund. I will let you tell me more about, and our public, the CRRH in French. This funding, it's very important, will allow many families, thousands of families, according to your assessment, to access affordable mortgages across the region, the African region. Can you speak about this project and maybe tell us what are the lessons learned from this experience for other projects who have the same impact?
Sure, thank you. Thanks so much for that. So yeah, we're sincerely really proud of the transaction for its outcome, but also because of what it represents that can be done, right? So we'll start with CRH. It was founded by the West African Development Bank in partnership.
It's a regional.
Sorry, yeah. So it's CRH is a regional liquidity fund that effectively sort of pushes liquidity into the local banks, who on lend as affordable mortgages to the local populations. They operate across Francophone, not Francophone, really the CFA, the West Africa CFA zone. Now, CRH itself was seeded by the West Africa Development Bank in partnership with the West Africa Central Bank and other regional development organizations. That matters, and the World Bank and others have sort of built on that experience to build others. So you have Nigeria Mortgage Refinance Company, Nigeria, one in Kenya, one in Tanzania, and they've been seeding others. This matters for a couple of reasons. There's a systemic problem of the lack of affordability of homes in the region, and the lack of mortgages. Buying a home, sort of paying off a home in 2 to 3 years is out of most people's reach. A mortgage over 10, 15, 20 years makes it accessible. Second, it's a local currency solution, right? So it's a mobilization of development capital to create a pool of local currency, effectively a fund, to solve a macro infrastructure problem. This can be done in other ways, and it has been done in other ways, but it should be done much more in other ways. Now, they've been able to raise money in small sums. We sort of got involved with them with the support of the US government, in this case USAID, now Prosper Africa. That matters also because MIDA itself was seeded, or sort of is the outcome of a USAID initiative we were launched as an initiative at the Africa Leaders Summit in 2016 to sort of educate and mobilize capital markets to solve Africa's infrastructure needs at scale, right? That sort of seed funding has gone on to where now today we're a private company operating fully privately, right? And we've benefited from the experience of the subsidy that we got at our start from USAID, from the USDFC, even from the World Bank. And today we have that, and we can sort of deploy that as a private institution in the markets. So we're able to feed a pipeline of opportunities that the development institutions didn't see before. That also is doable and should be done a lot more. I would argue the development banks, IFC, the African Development Bank, and others, should work a lot more and frankly incubate advisory firms like ours on the continent, because they can source structure and sort of feed a Python transactions that by themselves they could not. And then finally, the transaction itself. The US DFC provided a credit guarantee on the transaction. That allowed it to get an investment grade rating. That allowed then the transaction to be sort of taken on by multiple development banks, investment banks, JP Morgan, BNY Mellon, among others, sort of to do the issuance. And it allowed institutional capital to invest in something they never would have looked at because it's investment grade. And finally, and really importantly, these transactions are extremely expensive. In this case, there was grant funding from USAID to help defray the cost. Getting a credit rating is extremely expensive. The investment banking fees were very expensive. The structuring was really expensive. Now, the costs were not defrayed fully, but it made it accessible. And I think all those things put together make it kind of we would argue, a template transaction, all the way back to our founding and everything else, that much more that could be replicated, and that if it was done, you would see a multiplication of the impact of the capital that's available.
Right.
Thank you, Stephane. I have a last question for each of you. But starting with you, Otaviano, I have two questions. Could you summarize the reforms proposed in your report? Is it something doable? Because there's like 50 answers. And then I will ask you a final question. Among these recommendations, which one is the most pressing for the decision makers?
Right. Perfect. Well, let me highlight on the governance reforms proposals. I would highlight the adjustment of the IMF's quota allocation formula, as well as the due consideration of the weights acquired by economies in the composition of the capital of the World Bank and other multilateral development institutions. The link, access to resource, in the case of the IMF, from the size of a country's quota, and expand the board of directors so as to include independent directors, maybe from the private sector and civil society. On sovereign debt resolution, we should introduce a market-based system to buy down unsustainable bonds, like we had the Brady bonds in the 80s. We, as we suggested, maybe put in place an initiative of debt relief for climate, inspired by the HIPC. Consider the creation of some sovereign bankruptcy mechanism, an idea that floats occasionally but never materialized. And finally, on the climate and SDG financing, well, we should make sure that the finance by the institutions should address not only climate issues, but also create space for SDGs, the SDGs. We need to, of course, and this has been on the way, optimize the use of the MDB balance sheets, implementing the reforms that the CAF report, the report done for the G20 by the experts, is proposed. And finally, inevitably, there's no way to circumvent it. We need to have a substantial general capital increase of these institutions, because those optimization tricks, they will not be enough to create the space that the figures that I mentioned before will have to be.
Yes, but among these recommendations, fortunately, you have many supporters who already made the same suggestions. Which one is the most innovative?
Well, I would say the creation of the Green Bank. That would be definitely innovative.
Something new.
Yes.
Exactly. Stephane, we could talk about a lot of additional points, like the local currency fund funding or the bankability of projects. But I would like to ask you the same questions, as 2024 marks the 80 years of the Bretton Woods system, born in 1944. So this is a key moment we are experiencing right now. And among your recommendations around the private sector, I noticed, by the way, that Otaviano proposed to include the private sector and the civil society in the board of governors, which is interesting. According to you, what is the most pressing or important policy recommendation you could make today?
Sure, thank you. So it's conceptually, the issue we have to resolve is one of agency, right? There's a mismatch that we spoke about at a high level of sort of aging institutions that are sort of, we cannot circumvent and should not, I don't think, aspire to circumvent to solve sort of global issues. The institutions sort of are driven by their donors for a reason that makes sense, and the policies are driven by them, but the solutions are meant to solve problems in other countries. That disconnect needs to be addressed, and needs to be addressed urgently. And it's true also for the private sector, or for the mobilization of private capital. So I think at its heart, what we really need to get at is there's many sort of solutions put forward that are driven by an agenda, not malicious, but an agenda from the donor country side that is rooted in beliefs, philosophy, sort of, yesterday's experience that are meant to solve tomorrow's problems. We have to get over that. We have to find a way to get over that. And from my time at Treasury, I've worked in Congress. I understand it's not easy, right? And you need the parliaments to move, you need the administrations to move, and sometimes you need the populations themselves sort of to be open to these things. From a policy-specific recommendation, I think there's two that cannot be decoupled. The credit enhancement, right? Look, there's basically a market failure, or at least a market sort of deep imperfection, where risk is priced incorrectly, and market is disincentivized to move. The allocators of capital, for the most part, sit in the US and Europe. The commercial allocators of capital, they do not have very strong incentives to look today at African markets, even if tomorrow these are the markets that are likely to be the most relevant to them and to global outcomes, frankly. The second is so we need to more and better credit enhancement and harmonized credit enhancement that can sort of be combined and work together, and transparent credit enhancement so that it's accessible and democratized. And it can be commercial. It can actually be commercial. The second, which is related, is the issue of currency. Yeah. Currency risk doesn't disappear. It is probably the most sovereign risk in investment that there is. As currently structured, we're asking those least able on the sort of map, the project sponsors, and sometimes even the end consumers in Africa, to bear a risk over which they have no control, and which, when it moves even small amounts, can blow up their projects. It's unsustainable. The development institutions themselves and their shareholders, frankly, should give them a lot more space to explore solutions to the FX risk. And some of the solutions will involve local countries, whether it's central banks working together with the IMF and others to create swaps or to create sort of FX solutions that can be limited to the most high impact, sort of projects. But either way, the FX risk has to be addressed. We cannot continue promoting investments in hard currency for projects below a certain size that frankly just cannot sustain it.
You confirm the importance of the African debates right now around the currency. Yeah. So we'll see what will happen. So unfortunately, this conversation has an end. But the story you are telling is still ongoing, and the next step for the international community will certainly be the G20. Brazil may mark its leadership on these conversations, and so I think we'll have many opportunities to talk about your report again. So thank you very much, Stephane and Otaviano. Thank you also, Hafez Ghanem and Youssef El Jai for their work with you on this report. We are very proud and happy at the Africa Center and Policy Center for the New South to host this important work. A last word?
Stefan.
Thank you. Well, first, just thank you. Thank you to the Atlantic Center, to the Policy Center for the New South, for the opportunity to work on this. To the Honorable Minister who spoke before from Morocco for opening remarks. It matters. You know, Morocco today, you know, President Sall, when he sort of chaired the AU, and others, I think are doing a tremendous job in addressing this issue of agency and advocacy and sort of learning to speak in one voice, but also putting forward serious recommendations, things that are doable, and sort of confirming that the South broadly, Africa specifically, should be taken seriously and should be given sort of not given, should not be given a seat at the table because they deserve and earn the seat at the table, but should be listened to when they're sitting at a table. That matters a lot, and I'm really grateful to the Atlantic Council, A, for the opportunity to work on this, and B, sort of for the amplification that you're doing on these really important issues, so thank you.
Thank you very much.
So I can make myself his words. It's been an enormous pleasure, source of learning. It feels good.
Yes.
And
Thank you.
So thank you.
Thank you very much. And for our audience, of course, we have many publications that will be coming in the next months. Thank you for your attention during this IMF World Bank spring meetings, and see you soon. Bye. It's okay? I think it's okay.